Hello and welcome to yet another Equity for Keeps video. We're just coming to you half an hour after the US markets closed, and we have this piece from MarketWatch, and it says, obviously an opinion of whose opinion is it again? I think it's John Huber. John Huber is the founder of Saber Capital Market LLC, a general partner manager of an investment fund modeled after the original Warren Buffett partnerships. He can be reached at that email address you can see over there. So the topic is, or the header of his opinion is, stock market panics come and go, but buying opportunities are real and long-lasting. It begins, every panic of the past, even mini panics, such as those in 1998, 2011, and 2018, fades away, which is an important lesson for investors. Do you remember where you were on October 27th, 1997? I don't either, but on that day, the Dow Industrial Average plunged 550 points, which was roughly the same amount in percentage terms, 7%, as Monday's 2,000 point drop. In the late 1990s, the Asian financial crisis was the reason for that panic. But like many panics, as time passes, they seem to be much less meaningful in the rear-view mirror. Of course, this isn't true for all panics. We will never forget events such as the 9/11 tragedy or the September 15, 2008, when Lehman Brothers filed for bankruptcy, reciprocating a swift run on the financial system and a severe economic contraction that the country hadn't seen since the Great Depression. There was the Panic of 1893, which led to a depression that was arguably as severe as the Great Depression, and in fact was called just that until the Depression of the 1930s arrived. And of course, there was the Great Depression itself. But those are those great panics. But each of those great panics, there are scores of smaller panics that seem significant at the time, but in hindsight look like nothing more than a blip on the radar. Example of such panics that felt like full-blown panics at the time, including the 1998 Russian debt crisis, in which Moscow shocked the world by defaulting on its own ruble debt. The chaotic price movements in the markets crushed a hugely leveraged hedge fund called Long-Term Capital Management, which nearly took down the banking system with its massive trading liabilities. The fund was bailed out by its own lenders, thanks to some strong arming by the New York Federal Reserve, and that prevented the fund's immediate liquidation, which stopped the panic. Another panic occurred in 2011, in which fears of a double dip recession, remember that term, coincided with political gridlock and a debt ceiling standoff that led to the first ever downgrade of the credit of the US government. It seemed like a big deal at the time, and the market plunged roughly 17% from peak to trough, which with many bank stocks and all the cyclical stocks down 40% or more. There was the panic of 1907, in which the failure of a major New York financial institution led to a citywide run on the banking system, which drained liquidity from the economy and caused a sharp contraction, as merchants couldn't find their inventory and corporations couldn't make payroll. That crisis was historic because it eventually led to the creation of the Federal Reserve. But in fact, the panic and subsequent downturn turned out to be short-lived. I've written about this fascinating situation You can see that in the links he provided by clicking on here and here there. Okay. He went on one about more panics, and here he says a Dow drop of 550 points used to be scary. Referencing Dow points is usually a useless exercise, but I used to show how far the market has come from the days when the 550 points decline was a panic that required a temporary closure of the market. My point is that the stock market rewards investors who are long-term oriented and patient. Investing isn't easy, but it is simple. Owning a stake in a broad swath of American companies and ignoring the inevitable ups and downs is a surefire way to achieve success over time. A quarter century from now on, a 2,000 point decline will likely be much more normal, 1 to 2% drop, just like a 550 point drop is today. Stocks appreciate over time, and long-term investors get rewarded. Time heals all wounds. 3 years from now on, we'll all be looking back at the same time as a great buying opportunity. It's an extreme likelihood. I don't know if this panic is going to get worse, and I never know in real time whether the panic is going to be the once in a generation kind. But I do know that it is extremely unlikely. Nearly all panics wind up being mini panics in hindsight, and they also turn out to be fabulous buying opportunities. They are also viewed with relative indifference after a few years pass. Many people allow their memories of the fear to fade as time passes. Events that seemed important then are relatively meaningless now when they are filtered through the prism of time. The time arbitrage loophole. I don't know if this current coronavirus panic accelerates before it subsides, but I do know it will subside, and at some point, when enough time passes, often not much time is required, we'll all agree that it is a great time to buy stocks. We create opportunities in markets in that what creates opportunities in markets is that the current moment we don't all agree. Some view this as a buying opportunity, others think it's a great time to sell stocks, or that it's prudent to wait for more clarity. This disparity of interpretation is why stocks get mispriced. I've talked often about how SIBA's investment approach relies on time horizon edge, and this is a perfect example of why this approach can be successful over time. Stocks of great companies are getting sold because the earnings outlook looks bad this year, even when there's little debate about the long-term prospects for the business. Some investors are, in fact, panic selling out of fear. Others are more rationally selling because they don't want to own a business that will have a bad year. And this creates opportunity for those who want to buy stake in companies as a long-term part owner. So you can always read this up, and we'll provide a link to this site for you to read on your own as well. And thank you for watching, and hope you enjoy this. And please don't forget to hit that subscribe button so that you will be updated anytime we upload any video. Thank you once more.